Hi, my name is Dion Ribello, and this is the Bullion Vault. Hi, Willem. How you doing?
Doing well in yourself, thanks, Dion.
I'm good. This is episode 30, and we are now mid-year. We've passed the mid-year, and we're now heading towards the middle third quarter, and then of course they run into the end of the year and to the festive season. So yeah, again, last week we did mention that we wanted to do a review of where the various precious metals were in relation to the beginning of the year and where they are now, just over the last literally 7 months worth of growth.
Yeah, and it's been a massive year indeed. We've been talking the hind legs of a dog about gold, and we've spoken about silver, and then to a lesser extent we've chatted about platinum, which is quite interesting because that's the exact reverse order of how the metals have done so far. If we look at gold, it started off the year at 2623, that's $2,623 an ounce, round about there. It's currently sitting at 3,330 odd
Yeah.
dollars an ounce, and that's quite a significant increase of $706 an ounce, or it actually equates to 27% this year, which is,
It's significant. Yeah.
it's quite crazy actually.
Yeah, again, I smile because if you told me that we'd get that kind of growth in 7 months, it just sounded, if I'd said to you the beginning of this year, and remember when we sat down and we said, the crystal ball, where will prices go? And even then we said, with the markets being so volatile, both economically and also geopolitically, there was a lot of tensions even at the beginning of the year, that for us to even have an idea where the price was going was kind of a thumbsuck. Because and I say that with complete sincerity, because a lot of the people that are highly paid within the biggest institutes in the world were saying this, saying that, and they all got it completely wrong. So at least I haven't had to pay for a massive college degree to come up with numbers where we do our research. We do it across the board. We look at the different investment companies. And then if we look like with the institutional investors, I mean, your JP Morgans, your Goldman Sachs, and so on, a lot of their projections were 2,800, 3,000 would be great by the end of the year. It's shot past that. We've gone to 3.5. It's pulled back, but it's sitting quite comfortably right now.
Definitely, and it's funny that you mentioned Goldman Sachs. I think they've revised their projection about three times so far this year. But yeah, we, as you said, we said at the beginning of the year, and we look at what all of these big players are saying, where they say it's going to go, and we sort of make our predictions formulated on that, and our own little bit of intuition in there, and it's quite funny whenever I look at these things and I see these guys predicting these wild numbers, and I look at it and I think, yeah, no, that's not going to happen. I remember a few years ago, I think it was 2 years ago, somebody predicted, oh no, it's going to go to $4,000, and we laughed, you know.
Yeah, and it's what's interesting now. I'm looking at projections for 2030, and there are a number of them. I mean, JP Morgan Research, I mean, they're saying rising towards 4,000 by second quarter 2026. We're looking at by 2030, some of the market predictions are around $7,000. I've seen some to even $10,000. Again, there's a lot, it's quite a loaded question, like what is the growth of gold? Because it does rely on a number of things. We do know that it is a safe haven hedge. We do know that with the current market position, where there's not a lot of liquidity within the equity markets, the bond markets aren't doing that great, and so on. And then you throw in a bit of geopolitical issues around the world, and that just adds to it also.
Definitely, and the one thing we're seeing is, central banks have been buying gold. Um, and we've seen a lot of countries actually repatriating their gold, where they're getting the gold back from Switzerland or wherever it's being housed. They're getting the gold back, and they are keeping the gold themselves. So it's it's quite interesting how the face of gold has changed as an asset. It was always sort of seen as a passive hedge, where now it's actually becoming more of an integrated part of a planned investment strategy. Instead of just something sitting there and just taking care of it in the background, it's now actually being used as an active asset.
And if you look at the reclassification of gold with Basel III, where it went from a tier three asset to a tier one asset, for me, it's added a lot of spice for where gold has really now suddenly become a major player within different portfolios across the board. In fact, it's overtaken the euro as the second largest reserve asset in the world, behind the US dollar, and that for me already spells big movements forward. And again, you're looking at countries. We mentioned reserve banks; they buying gold. There's this whole movement away from it. It's quite interesting right now.
And it's not just the reserve banks at the moment. I mean, we've got the sovereign wealth funds that are starting to buy gold. Now sovereign wealth fund is sort of like a investment portfolio for a country instead of the central bank. And up until now, it's been sort of, they've been treating the gold as a passive asset, and that is changing at the moment. It's becoming a deliberate sort of play for stability and independence, because countries are looking around, they're seeing rising global geopolitical risk, they feel that vulnerability to sanctions, they starting to distrust fiat currencies, and all of that is just playing towards them actually moving to a tangible asset, and naturally that asset is usually gold. So it's something interesting I read here. I mean, according to the World Council, 95% of central banks expect global gold reserves to increase over the next 12 months, and if we go even further into that poll, then you see 43 plan to increase their own gold holdings this year, while last year it was 29%, 43%, and last year it was 29%. So it means that the confidence in gold isn't just, sort of growing, it's actually accelerating.
Yeah, and I always said this is, and the payoff is there's a lot of like individual investors that have been buying gold, some of our own clients, and their portfolios have really strengthened just over the last 7 months. But what's interesting is, and I'm dealing on a specific case in one of the African countries where they wanting to use gold as a gold investment note to restructure debt with using instruments. There's a gold-backed collective investment schemes. I mean, the tokenization of gold units, as far as digital gold saving plans. I mean, there's so much going on in the space as far as people seeing the opportunity and trying to make sure that they can offer products to the market that are actually going to best serve them, especially with fiat currencies being so volatile right now. Economy is not being in great shape either.
Yeah, I'll get back to the fiat currency vulnerability right now, but something that just popped into my mind, and it's, I mean, a little bit off the topic, but I was just thinking about, these space mining companies that are talking about
Yes, mining asteroids.
that's the one, yeah, and they're talking about, oh, it's got this much gold in it, and if we can mine that, then everybody on Earth would be a billionaire, and it's quite interesting because, let's face it, should they go there and mine that and bring back tons and tons or millions of tons of gold, it's basically going to be worthless. That is the core behind gold, is that it's precious.
Again, I'm smiling because I'm thinking of unobtainium, which is
Uh,
from Avatar.
yes.
And again, we are going to be a species that is going to go beyond our own planet, and it's a given. Like you say, the mining of resources, will that change the value of it? Interesting enough, diamonds has been met that through the manufacturing of diamonds and your natural manufactured diamonds that come from the earth that are formed over millions, if not billions of years. Now you can do it in the space of a couple of days under the right conditions with a bit of carbon and pressure and heat.
I think the difference there is gold isn't something we can manufacture.
Yeah.
It's not something. Well, we
Well, we can. You must be careful because that's alchemy.
Well, yeah, they have managed to transform some gold, some lead particles into gold in the, I think it was at CERN, and but yeah,
It is possible if you to consider you're taking different elements on the periodic table and you're saying, okay, what does it mean, how many atoms or this and that is in gold and yes, it is possible, but I think the cost probably completely outstrips the actual value of trying to make.
well, it's completely it's not viable in any form because they made a few, I think, a few nanograms for a few seconds as they stripped away an electron or whatever it is that they do. But yeah, it's just quite interesting. But I think the whole thing, the thing that makes gold valuable, that makes it this world class asset, is the fact that it's rare, is the fact that it is difficult to obtain, it is rare, and um, it's a finite resource. So yeah, it'll be interesting to see what happens when they start shipping back tons of gold from space, if and when that happens. We can go into, will they do it, or will they try and keep the gold valuable on Earth? Because it's gonna lose value. It's like anything. If you've got an overabundance, you lose value.
But think about this. I mean, any company that's going to go invest in billions of dollars to go and mine asteroids is going to make sure that whatever they're mining has a value and can maintain a value. Who knows, in 20, 30 years from now, gold could be $40,000 an ounce. And, then it's a difference if it is half the value. But that again, I mean, it's interesting that these are things that we're talking about that seem so far-fetched and yet are highly possible.
No, definitely. And yeah, so anyway, let's get back on the topic here.
Yeah, so what about silver? I mean, silver, we great advocates of it. We think it's a great entry level product for the man in the street that can't afford to be buying an ounce of gold. When you're looking at $3,300 an ounce versus where we're sitting at what, about 30, just short of $38 an ounce right now.
No, definitely. We spoke about silver, but it's number two on our list that we usually talk about. And once again, it's number two on our list of performers so far this year. I mean, if you look at the beginning of the year, we were looking at $28.96 an ounce, which interestingly was the low point for this year so far.
Mm.
That was the absolute bottom. Right now we're sitting, as you said, $37.88, just shy of $38, and that means it's gone up by almost $9 an ounce this year, and that translates to almost 31% increase over the last year. And we've always said silver is very erratic. It's up, it's down. And a part of it is because it's tied to the actual markets. It's tied as an industrial resource to the actual markets. So when markets are doing well, the price will go up slightly because there's more demand, there's more consumer demand for electronic goods, etc., etc. And silver is a great component of that. But what we've seen this year so far is it's gone up and it's actually held its ground. It's, as I said, January 1st, $28.96 was the absolute bottom for silver so far this year.
Yeah, and it's been a great performer. And as you say, it's been consistent. I mean, we've always spoken of years gone by where gold and we use the analogy of gold being that marathon runner where it moved at a slow pace but it continually moved upward. And I always used to say that silver was the ADHD brother, where it was up and it was down and it went to $12 an ounce and then shot to 30 and then back to 18 and so on. And it was all over the place. Suddenly we saw that trend change at the beginning of last year where it was slowly starting to settle on different mid $20 ounce levels, then moved up into the mids and to the higher 20s and slowly just started to gain more momentum. And it almost is coming of age to a degree where it's no longer that ADHD child. It's actually now becoming the marathon runner. It's going for the long run. And what's interesting, I mean, we're looking at projections. Some people are saying within the next 10 years, I mean, that's 2035. We're looking at about, it could go up to as high as about $150 an ounce.
Yeah, and I think the thing that's supporting it very much at the moment is the fact that, we are seeing a massive, massive shift in the sort of green economy. People moving to electric vehicles, people moving to solar and wind power, and I mean, harnessing ocean currents and all of that. And silver does play a big part in that. Silver is a crucial element in solar panels. I mean, basically, what they do is they coat the whole thing with a thin layer of silver. And because of that, the demand for silver is going up. The market's demand for silver, there's been, I think it was for 7 years or something like that, there's been a deficit on silver
Yeah.
production. And now all of a sudden, demand is going up. There's been a deficit for a number of years, and that's pushing the price up.
Absolutely, and I think again that translation of where it was almost this back delay, that winding up of this what we're seeing now, the movement of silver, and again, I think there are commentators saying that we could see silver into around $40. So there's a lot of market commentators saying we're not far off it. I mean, again, if we looked at gold beginning of this year at around $2,600 or just over, and if we had said that we by June would be in June, it was probably around even a little bit higher, so around $3,400 an ounce. If we had said that that would be, we'd be like, that's impossible.
Yeah, I remember beginning of the year when you asked me what my prediction is, I said silver is going to be about 35, $36 an ounce. Boy, was I wrong. But yeah, yes, and I mean, last week we spoke about it, about Mike Maloney saying, we're heading for $50 an ounce, and once we get to $50 an ounce, we're in unprecedented territory, uncharted territory. We don't know what's going to happen. It's never been there, and we don't know what's going to happen once it gets above that $50 an ounce mark. It could just absolutely take off, skyrocket, and we could see a total transformation of investing in silver.
Again, we always get asked these questions, like, am I buying on a peak? At around $38 right now an ounce. Am I buying silver, which is well priced still, but is there a risk of it actually dropping and losing value? And again, we can go back and we can say simply, if you look at the indicators in the market, there's been a deficit for a number of years. The growth within the solar voltaic market is running at over 20% per annum. The markets, two biggest markets being China and India, we see it globally as a source of green energy. And again, that's what that's all about, is we can see that silver will continue to grow and will maintain what it's been doing. And and if not, it will continue to grow upward. So there's still lots of room to play. I do believe that we will see probably $40. I don't believe it will be probably this year. I think we may get a peaking just short of it, and then there might be a retraction. Or the other side is it pushes straight through and heads to about 45, and then we see that mythical 50.
Definitely. I mean, firstly, once again, disclaimer, we are not financial advisors. So, take what we say with a grain of salt. Well, our goal is to provide as much information as we possibly can with the information available to us. So, but other than that, I always say, people asking us, is it going to go up? We don't know. Honestly, we don't know. If somebody could predict with 100% certainty when it's going to go up, when it's going to go down, how far it's going to go up, how far it's going to go down, etc., etc., they would be the richest man this planet has ever seen 100 times over. And this is the thing. I mean, we were talking earlier about JP Morgan, Goldman Sachs, revising their pricing points or their pricing outlooks for
Projection, yeah.
projections for gold. And they don't know. They've got some of the best and brightest minds working on this, and they don't know. So it's extremely difficult to say, oh yeah, this is the bottom. It's only going up from now, or ooh, this is the peak. Sell now, and that's basically what we always say is it's not a case of chasing the peaks and the dips. It's a marathon. Buy your gold, buy your silver, your precious metals, and hold on to it, because that future growth, that steady increase over time is what's going to make you the money.
You know what we should do, just for interest's sake, and we'll do it for next week, is the Hershey bar experiment with silver. That would be nice because I think that was around 2015, if I'm correct, and there and thereabout.
Yeah, it was quite a while ago,
Yeah.
actually.
So again, and what we'll do is we'll save links to that. So we'll do that for in the next episode. And again, what we're really highlighting here is it's not about buying today and realizing a profit tomorrow. It's about buying today, holding tomorrow, and allowing it to grow over the long period. Buying into precious metals, especially the physicals, is you got to be patient. You got to be able to sit and you got to be able to hold it for a long, extended period of time. And the question I get, what's an extended period of time? You should be able to put it away for at least 5 years, 3 to 5 years, three minimum, bare minimum. But I'd even say that's pushing it. I'd say realistically, you probably need to hold it for a minimum of 5 to 10 years to realize any growth. And again, if we look at an RA and we compare it to an RA's growth, you're looking at a 20 to 30 year period on where that RA actually realizes its growth. And if you want to do the same comparisons, that's how you should be comparing it. Is I'm buying gold to hold for the next 20 to 30 years for my retirement or for my children's future.
Definitely. I mean, I quickly looked it up while you were talking about the 5 year minimum 5 years. I've actually got some figures in front of me. This is from goldprice.org, and they've got this lovely little performance chart that you can go and you can see what the change has been. I mean, if we're looking at 6 months on gold, there's been a $528 dollar increase in the price of gold. That's 18.89%.
That's
If
phenomenal.
if we're looking at 1 year, that same figure goes up to 36%. And then we get into the good stuff. We get 5 years, as you mentioned, is 68% increase. That is $1,353 increase per ounce of gold over 5 years. But now here's the thing. We say, okay, 5 years, fine. But then we look at 20 years. And would you hazard a guess as to the percentage increase over 20 years?
I actually know this. I think it's about 1,500%.
Well, not in US dollars. I'll look in rands just now, but in US dollars, it's
Okay,
674%.
I
Uh,
think I'm thinking of the rand
yeah,
one because
I
the
can
rand I think is about 1,500.
yeah, I can look that up quickly. I mean,
But 600% growth in what, 20 years?
in 20 years, that's $2,897 per ounce. I mean, it's insane to think about. Well, you were actually quite a bit off on rand. In rand, it's 2,000% over 20 years.
Okay.
And you might say, oh, but 20 years, gee, that's such a long time. And then you go look, okay, when did Monsters Inc. come out? Yesterday? No, that was about 20 years ago.
Yeah. And again, this is like we like to compare it with certain asset classes. And for me, I'm a big one to say, what are you doing for your retirement? What are you doing as an RA, retirement annuity, or a savings plan for retirement? That's not a 5 year period. That's 10, 15, 20, if not more, 30. That's kind of where you should be looking and what you should be considering when it comes to buying and actually growing your gold over that period of time.
Yeah, definitely. It's, retirement age is getting pushed up all the time. And
Well, realistically, based on inflation and thanks to all this quantitative easing and devaluing of currencies and in turn pushing up inflation, which we end up paying for literally on the food we eat. And again, that's where it comes. It's inflation.
definitely, and I mean, let's say you're 35 years old. That's 30 years before you can even think about retiring now. So it's not a case of, you know, um, holding for 5 years for retirement, as you rightly said. That is a 20-year, at least 20-year commitment you're making there. And we spoke speaking about the currency decline earlier, and that's actually one of the big things behind the price going up on all of these metals, because a part of it isn't simply gold getting more expensive. A part of it is actually the US dollar losing value.
Weakening, yeah, absolutely.
If we look at the South African rand, beginning of the year it was 1886. Right now it's sitting at about 1787.
So pretty much a rand strengthening for the rand to the dollar, but the dollar weakening to the rand.
Definitely, because it's not that the rand is getting a lot stronger. You know, we've got our own problems, which we've discussed at length over various episodes here, and so it's not that the rand is doing extremely well. It's we see actually the decline of the dollar there, and that is also reflected in the price of gold, silver, platinum, all going up.
Again, we've spoken about that one of the big catalysts and the reclassification of gold, the fact that it is now a tier one asset, that it's outperforming fiat currencies hands down. It's the the preferred asset class, barring the dollar. So the gold's whole position has changed within the last 3 years, where people that bought gold were the outliers. They were the people that were looking for alternative investments. And still, I mean, there's value in gold in the physical because it has a value anywhere in the world. I can take an ounce of gold, pay for it in rands, and I can go anywhere in the world and I'll get a similar value for it. So it's geo neutral. It's a fantastic product that is borderless.
Pretty much, yeah. I mean, we've spoken about this before many times. It's one of the biggest advantages is the fact that if I have an ounce of gold, it has the same value no matter where I go in the world. It's not something that is defined by your local currency. It's defined by a global pricing. By it's usually priced in US dollars, but I can go to Europe. I can get the euro equivalent of what that gold is worth, and that's going to be sort of level across the world. And yeah, and then we get to platinum, which is now the big story because this is the one that we haven't been paying much attention to. And while we haven't been paying attention to it, it's made some big moves.
Yeah, and again, it was the top performer 2 years ago for that year within the precious metals, being specifically gold, silver, and platinum. And then it had a very tough 2024 where it really battled to come back and it actually lost some value. And what's interesting is it has turned around and taken that turnaround. It's gone phenomenally well over the last 7 months.
Definitely. We look at January, it was $896 an ounce. We look at today, it's $1,391 an ounce. That's almost $500 per ounce that it's increased this year alone. That's 50, I can't even say 55% that platinum has increased so far this year.
Well, what's interesting, I mean, we're looking at future projections that platinum will go to around 3,700. And that's people that are within the industry, knowing that platinum has great demand. We've spoken also at length about this being quite integral to the whole hydrogen economy as a catalyst of taking hydrogen into electricity. We've spoken about the AutoCAD sector, which will be becoming a market that will slowly start to narrow, but that technology improves and gets better. They will continue to use platinum within that.
Yeah, and it's also a large part of the green economy does rely on platinum as well. We see you've spoken about the hydrogen. Electric vehicles require more platinum actually than your normal internal combustion engines. We see regulations coming in for emission controls on diesel trucks and the like. And as we said, I think it was a week or two ago, platinum is very crucial to that sector, in especially the diesel vehicles, the trucks, just because it's got a higher melting point than palladium. And that's the reason why they're actually using platinum in the AutoCADs for these diesel vehicles. And to adhere to the new regulations, the new emission standards, all of these trucks are either going to have to build to new specifications or retrofitted to comply with those regulations. And that's where platinum is also going to be very much in demand.
And we have spoken about this also is where battery power, as far as EVs or your electric vehicles, there's phenomenal growth in that sector. But as soon as you start translating it to bigger vehicles, so to buses and trucks, where your payload and your weight becomes critical. That if you have to have a truck that's powered by batteries, I mean, literally a third of the truck's weight will be just batteries, never mind its payload, and then becomes uneconomical. Whereas platinum utilizing hydrogen is a far better option. Recharge times are quicker and so on. I know that battery, a lot of their technologies are improving, but they still got to overcome the power to weight ratios.
Definitely, weight is the biggest thing, and especially true of freight vehicles.
Yeah.
Because I mean, the whole point is you lugging a bunch of heavy stuff around, and yeah, so that is, I think, at this stage, the biggest stumbling block for batteries or electric vehicles is the battery weight. I mean, you look at basically any electric vehicle, it's a heavy thing. It has to lug around all of those batteries. While your hydrogen fuel cells or your hydrogen energy cells is roughly the same weight as a normal internal combustion engine.
Yeah.
And recharge times, as you rightly said, same thing. Yes, batteries are getting better. We're seeing massive improvements in charging speeds, especially from the Chinese manufacturers. It's some of the stuff we're seeing coming from there is absolutely insane, but it still takes a bit of time. And obviously, the bigger the battery gets, the longer it takes to recharge it.
And again, we also look from batteries, rare earth metals, and so on. So the sustainability, the technology's there, but it does need to have some massive shift on how they do it. I know they're talking about nanotechnologies and that also with regards to batteries, but we're not there yet. And I still think, and I do believe, we've mentioned it, that Japan's a big advocate of it, and they are the first hydrogen economy, but we just need one hydrogen vehicle like what Elon did with the Teslas. Made it very sexy. Suddenly, everyone wanted a Tesla. Now you go to America, they're burning the damn things, but that's political. But realistically, the hydrogen has probably, and this is why I always said, and I've always been excited about platinum, is its growth for the future is very strong. And when they're talking about a projected growth of around 3,700, I don't believe that's impossible.
Definitely not. I mean, we've already seen it above 2000. Geez, probably about a decade ago or more now. It was over $2,000 an ounce, and that was when the switch happened from platinum to palladium in the AutoCAD sector, or it was a big driver behind that switch. Um, but yeah, it's sort of like a cycle that's repeating itself. But yeah, I definitely don't think $3,000 an ounce of platinum is absolutely out of the question.
And again, you review all three of the precious metals, and they're looking strong. We know we're in a commodity boom. We know that the world is primed for this to be assets that are going to be dominant, and not for the short period. I think this is going to last a good couple of years, definitely into the next decade.
Yeah, and what has been especially interesting is, if we look at the stock markets, it's sort of regained to where it was before the whole Liberation Day or Freedom or whatever it was called, tariff business
Yes,
started.
yes.
So the stock markets are back there, so they've been climbing up. And the interesting thing is, usually when the stock market climbs up, you see your asset classes like your gold, silver, platinum actually going down. While this time around, they've sort of been climbing together, which just says that the whole perspective of gold, of silver, of platinum has switched, and this is actually now also seen as a proper asset class, a proper investment vehicle.
Yeah, and again, we're going back to the whole reclassification from Basel III as a tier one asset, and that speaks clearly to that. And we're going to see the demand, as we've mentioned, that gold is going to be in more portfolios. Like I mentioned, even projects that I'm busy with directly, they're looking for gold-backed products that can actually be utilized within the market. And it does make a lot of sense. Gold has shown the stability, and it's shown its growth not just over the last 20 years, over the last 50 plus years, it has been constant.
And I think that's the most important thing here. People are asking, oh, am I buying at a peak? Am I buying at a dip? this is the thing. It's not about are you buying at a peak or buying at a dip. It's about diversifying your portfolio. It's about getting into other asset classes that are not linked to fiat currencies, getting your money out of those fiat currencies into something that is um, holds international wealth, and that's always what we say. It's not about turning a quick profit. It's about hedging your money out of fiat currencies into a stable um, commodity that will actually increase over time.
Just in closing, any final thoughts?
No, I think we've covered a lot of stuff here today. I think right now is pretty much as good a time as any to get into precious metals, and that's always the question: is now the time to get into it? But you never know when is the right time. I don't know. I can sort of predict where it's going to be going based on observations, but once again, if I knew exactly when to buy and when to sell, you know, I would be flying around in a helicopter right now, so that would be fun. But
Absolutely. And again, I think the important thing is it's shown resilience and it is the right time. Is it on the peaks right now? It's actually irrelevant. It's about other factors, as you mentioned. Inflation's a big thing, currency devaluations, uncertainty, and there's a whole number of things. So you got to kind of like say to yourself, if I look at my portfolio, where do I have the most exposure? And you'll find that you've got a very little bit of exposure into gold. I always smile like people want to invest in gold, and then they're like 300 Rand a month. And I'm not, for me, whatever anybody's prepared to buy for it is brilliant because it's a mindset shift. But if they realize the value of growth that we've had over the last 3 years, I don't think they would have put in 500 Rand a month. They probably would have been putting 5,000 Rand a month. But again, are you playing into the greed of the growth? And that also we say is be a little bit wary of that. You got to be playing it to what you can afford, your own personal liquidity, to make sure that what you are doing is sustainable over a long period, that you don't buy today and suddenly you got an emergency and then you need to start liquidating.
definitely, I think the point we're both trying to make is it's important, or it's more important to actually just get started into the market than to pick the right time.
Yeah. In closing, anything else, Philip?
No, I think that's it from us for today. I hope you enjoyed the video. If you did, leave a like, and if you want to see some more, be sure to hit the subscribe button, and we'll see you guys in the next one.
Thank you and take care. Bye.